What's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. So in this video, we're going to be breaking down a EURUSD day trade that took place this morning, January 25th. All right. Now, my main focus was not EURUSD this morning. My main focus was actually AUD/USD, which I'm currently still in. But I have a small position still running on EURUSD to target this region here. So I figured we might as well break this down and go over it. Now, for those of you who follow me on Instagram, you guys probably already saw this this trade posted to my Instagram story. Remember, every single time I day trade, I always try to post the trade that I'm taking and where I'm at and things like that on my story, so you guys can see how I apply the information in real time, things like that. All right. If you're not already a part of the YouTube family, feel free to subscribe to the YouTube channel. Leave a like on this video if you enjoy. And if you have not commented on a previous video whether or not you like gray and white versus the original chart colors that we had a couple weeks ago, being this here, right? Feel free to let me know. I think I'm liking the gray and white a little better, and from what you guys have been saying, you guys are liking that as well. So we may keep it at gray and white. All right. So with that being said, sit back, relax, and let's get into it. Now, before we get started, if you all want to know exactly the information that I'm applying and why I'm applying it in these different areas, feel free to join the mentorship program, okay, where you will gain access to my institutional trading course, all right? Because in the institutional trading course, it's really where I go over all this information and how to day trade. We are also going to be doing a 3-day masterclass specifically around day trading, all right, and how I do what I do on a daily basis on the lower time frames. So if you're interested in that, just stay tuned, because we will have some announcements coming shortly. All right. So on this day trade, I actually took 2 positions, and sometimes this is what you're going to run into when you are day trading. Sometimes you are going to have to take more than one position before price starts to move, but it comes with the territory, right? That's why we manage risk, only risking 1% of our account per setup, looking to gain between 7 and 10% minimum per trade, all right? Or you can say 5%. It's completely up to you. Some of my students just target 5%. I like to target somewhere between 7 and 10%, all right? And then if I can get more, then of course that's always a good thing, all right? So let's go over the setup here. So on the M15 time frame, of course, that's where my zone was based off of. All right, so if we scroll back just a little bit, you guys will be able to see this is the M15 zone that I based this trade off of. If you guys want to know how I select my intraday zones, either sign up for the masterclass, or what you can do is you can feel free to join the mentorship program, and I have you guys covered. Usually whenever we day trade, which is every single Wednesday, I give you guys the points of interest that you should be looking for price to attract to or rejects from, and I give you guys exactly what we're waiting to take place within the market. Sometimes we do get a trade before New York session starts, but I like to really take my trades during New York session or during London session, depending on if I'm trading with my London students or students in the States. All right, so this is the M15 zone that we're playing within. And of course, because it's the M15 zone, I'm going to take my entry on the M1 time frame or lower. So the M1, 30-second, the 15-second. I don't really dabble with the 1 second and 5 second just yet, but you guys know we're on our way. Now, in this case, I actually did break that rule, right? And I thought it was a little bit cleaner on the M5 time frame. So that is really the time frame that I paid attention to and put the most emphasis on in this case. But that M1 time frame still gives you a very, very good trade, right? This kind of matches the AUD/USD setup as well. All right, I use the M5 time frame on the AUD/USD setup. If you haven't watched that, feel free to go check it out. And if you haven't watched the first EURUSD breakdown, which was this over here for day trading, feel free to go check that out as well. All right. As you guys can see, the more we're moving into January, the more these day trades are taking place. And you guys can be expecting regular uploads from me as it relates to day trading. I haven't day traded too much in the month of January, simply because we've been trading based on the higher time frame, waiting for the volume and the momentum to kick back in the market. And honestly, guys, it looks like the volume and the momentum is here. So if we're looking at this zone here, right, remember this is the M15 zone that we're playing within, we can see the first entry opportunity comes when price sweeps liquidity to the downside here. Now, we did not get a candlestick body closure, but for those of you who do have the course and who do trade with me live, you guys understand why I use this as a sweep of liquidity. And then we saw that price push to the upside, giving us a change of momentum from this downtrend here. Let me bring this here, right, from this downtrend here to a possible uptrend, right? Now remember, price is not confirmed to being in an uptrend until you get that second break of structure with that second confirmed higher low, which is why this is where I took my second entry after this one did not work out. So we can see that price trades back into the demand that was responsible for taking out the supply, as well as giving us this change of momentum to the upside. Price returns back to that area, and we have a wick to the downside. All right. Now, that's not necessarily a bad thing. Anytime you see a wick sweep to the downside and then you see price continue to break structure to the upside, that tells you that you may want to consider that wick being your possible entry opportunity, or the candle that created that wick being your possible entry opportunity. Now, because this is an abnormal candle here, I actually used a little bit of confluence with the previous candle in order to select my entry opportunity. We can see that we have a break of structure to the upside. Now, remember, there are two ways to look for a break of structure. Well, there are three ways to look for a break of structure, right? And just based on your personality, you can choose the way that you would like to look for your break of structure. If you guys have any questions on breaks of structure and things like that, feel free to drop them in the comments down below, and I'll definitely get to them, possibly make a video if we have enough questions regarding breaks of structure. So I use the first case scenario for break of structure. In this case, we see that this wick traded above these body closes here, okay, giving me that break of structure, especially if you were on the lower time frame, such as the 1 minute. All right, if we go to the 1 minute really quickly, all right, then you can see that we do close barely, but we do close bullish above this region. Now, if you went to the 15-second or even the 30-second, then you definitely were able to see that candlestick body closure there. But let's go back to the 5 minute where this entry was based on. So back to the 5 minute time frame, we can see that price returns back to this area here. All right, the entire candle that sweeps liquidity, demand came into the market right here within this wick in order to break structure to the upside. Price returns to that area, and this is where I took my entry. Now, I broke my rules low-key on this trade because I did not round up in this case, right? It was a huge stop loss for a day trade, 7.3 pips, which means I would have to round up to 7.5. Instead, I just simply rounded down to around 7 pips, okay? And my target is a little it's a little deep within this zone, simply because I'm trying to get that return on investment, right, around 6.49%, all right, which isn't the best in the world, but guys, remember, that's 6.49% of however much money you have in your account, only risking 1% of your account. That is still very, very good, right? Most traders receive like a 1 to 2 or a 1 to 1. This is a 1 to 6.49, and this is considered low, right, like below average. So this is a very, very good trade. So we see price tags us into this entry, we consolidate just a little bit, and then demand comes into the market and starts to break structure to the upside, giving us bullish momentum. Now, you could have found other re-entry opportunities, but I'm not going to talk about that. What I want you guys to understand is the more structure price creates away from your entry, okay, the less probability the new entry is going to be. So for example, we have this low, we have this higher high, higher low, higher high, higher low. We have a higher high, higher low, higher high. This could have been another entry opportunity if you were using the 1 minute time frame or lower, right? But as you get further away from your original entry, okay, the probabilities decrease, all right? They decrease a lot because really price could have returned back to this area where we have inefficiency, okay? It could have returned back to this area here, which is responsible for sweeping it and mitigating something before price pushes to the upside, right? And all of these things that I'm talking about, I talk about within the course, so you can be on the correct side of the market every single time, all right? So the first target where I closed a small percentage was here, okay, around 3.9. Like I said, it's not the best in the world simply because we're risking around 7 pips on this trade, right? Still 1%, right? So when I was up around 3.94%, which was here, let's fix this really quickly, right here at the beginning of this zone, okay? Instead of going break even, I went break even as well as I closed 80% of my trade, all right? And I'm looking for 20% to run into this area here, around 6.5%, just targeting this swing high here, or we could actually target this here. It's up to you guys completely, but I'm targeting this region right here. All right, so with that being said, this pretty much concludes this breakdown. All right, I just wanted to give you guys a different example than the 1 minute time frame. You can also use how we trade on the M5 time frame as well if you don't have time to look at those 1 minute candles. But remember, session time is very, very important, and also finding a correct point of interest to play from is very, very important. All right, so you don't want to select any point of interest, like this point of interest that I have here that I'm trading from. All right, there's a specific reason why this is the point of interest that I'm trading from, especially on an intraday level. Right, selecting your point of interest on the lower time frame, are a little different than selecting your interest on the higher time frame, and that's something that you guys have to keep in mind when you are intraday trading. All right. With that being said, if you haven't backtested this area yet, feel free to go ahead and backtest. If you did not take this trade, feel free to go ahead and backtest. And if you did take this trade, then compare your entry and your markup to mine. All right. Make sure it's as simple as possible. Yes, you can get into into like very, very small details, but the simpler your trading style is and the simpler your trading plan is, the more money you're going to be able to make, because you're not going to have to think as much. Because remember, guys, even though this is on the M5 time frame, right? Price does not stay at your entry for 5 minutes. Price wicks your entry. In this case, we wicked once, twice, 3 times, right? But we usually don't get those types of opportunities in order to sit on the sidelines. Usually price will wick us in and then continue to push to the upside, right? So keep those things in mind. With that being said, if you aren't a part of the YouTube channel, feel free to subscribe. I would love to have you a part of the family. And with that, I will catch you guys on the next video. Peace out.